Good morning. This is Larry McMillan with a stock market update on Monday, October 16th. So the market was oversold a couple of weeks ago. It bounced off support. The rally so far has proven just to be an oversold rally. It hasn't really gotten a fully bullish status. It's run into resistance at around 43.80, which is just above the declining 20-day moving average. And above there, there's a gap that would be filled at 44.01. So if it fills that gap and closes higher than that, that would be more constructive. So far, this rally hasn't proven much of anything. The equity-only put-call ratios are split. The standard ratio is on a buy signal, but the weighted ratio is not. And there's been quite a bit of put activity lately. We've seen the total put-call ratio also move higher into a position where it could give a buy signal, but like the weighted ratio, it still has not done so at this time. There's a McMillan volatility band buy signal in place, though, so that's one positive note for the market. The breadth of the market was improving until the last few days, and then it deteriorated again. So now we're back where recent breadth buy signals have been canceled out, and we're looking to set up a new breadth buy signals. That might not be that hard to do, but it still needs to be done if we're going to have a bullish indicator from breadth. The new highs versus new lows on the New York Stock Exchange have been just completely in favor of the new lows, except for one day. So the last couple of days, we've had more than 160 new lows on each day. So that indicator remains negative for the overall stock market. Now, VIX has something that we've been watching, of course, very closely. VIX is on a spike peak buy signal right now, but it's tentative. It almost traded up to the old highs, meaning highs of earlier this month. It almost traded up to that point on Monday or on Friday, but here today on Monday, it's falling back again somewhat. So there is a spike peak buy signal in place. A much more negative VIX signal is in the making, and we'll see if that is confirmed or not. I don't want to go into all the mechanics of it, but basically, we're seeing what we call the trend of VIX could be swinging from, it's been downtrending for a long time. We could be swinging back to an uptrend, which would be bearish for stocks. Finally, the construct of volatility derivatives, which is the term structure of the futures, is generally sloping upwards. That's positive for stocks. The only potential negative there is that the short-term volatility index on the CBOE is a little bit inflated, but that's because of the problems in the Middle East. So overall, the indicators are mixed. The S&P chart is negative, so we're still retaining a core bearish position because of that. That would change if S&P closed above 44.01. Otherwise, we'll trade confirmed signals around that core position. And I invite you to visit our website, our newly updated website, by the way. You might want to just take a look at it just to see how it looks right now. And meanwhile, have a great week trading.